Jerry, welcome back.
Great to be here. Are you able to hear me now?
Got you, Jerry.
All right, great, Dale. Thanks for the invite back.
Yeah, and you had some interesting thoughts last time we were together. If you want to share the screen, you know where it's at the bottom. Jerry's company and Twitter handle is at FTM.
FTM Daily.
Daily, okay. And that stands for?
That stands for Follow the Money Daily. The website being followthemoney.com.
Okay, so you do some money flow work to give you cues on, where the volume and when there's accumulation or distribution on individual issues.
Exactly. Yeah, we spend quite a bit of time focused upon helping people understand trends in particular. Trends are something that I think are very, very helpful, especially for newer traders when they're getting started.
Yes. Yeah. Someone commented, what a great handle to have. You must have gotten it a long time ago. Follow the money.
Yeah. Well, the handle is FTM Daily.
Yeah.
Follow the money was taken, but followthemoney.com. Yeah, we did luck out with that one.
Yeah. Okay. So tell us, the big question really is, after that big rally from mid to late June, S&P's rallied to above 4,300, sold off to 3,900, recent bounce. Was that rally to 4,300 the beginning of something, or was it just another bear market rally and the resumption of the bear is underway?
Okay, yeah. So what I would say here is what we've been explaining to our members here at Follow the Money has been that we've just really been locked in a really obvious downtrend. I mean, you can clearly see it on the charts here. That color may not be really great. Let me see if I can get a different color there. Black.
I like that line.
Yeah,
because there's actually a line for off the lows in June and July that came in at 39, right where we held at 61.8. And it gives it the look. I'm talking about the uptrend line from the June lows.
Oh, sure. Yeah, this one that's coming right in here even.
Yeah, it held pretty much, spiked underneath it. But, trend lines are like mattresses, so not concrete, right?
Exactly.
So if you look at that with your downtrend line, it's almost like a huge triangle to me.
It looks like a triangle, quite frankly. It sure does. And
like
it
a symmetrical compressing.
Yeah, that's right. Exactly. It looks like a symmetrical triangle. And the only reason I don't want to emphasize that too heavily is because that might give us hope that we're going to get out of this pretty easily. And I don't know how easily we get out of it. Now, tomorrow, Tuesday, we're going to get a big inflation report. And I think a lot of what's, of course, driving the fear, the panic that we've seen pretty much all year long is the idea that, we are in a recession or inevitably going to go into a recession at some point. Some people saying we already are. Some people say we're going to hit it next year. One of the things I've learned over the last many, many years of investing and trading, I traded my very first stock in 1996. I traded my first option in 2002. I bought my first cryptocurrency in 2012, and I've seen all these different markets. And I've lived through some times of panic. When I first got started, Dale, you can probably relate to this, but when I first got started back in the 90s, I lived through the dot-com bubble, and I felt invincible. In fact, many people who got into the stock market in 2021 probably felt the same way. There was a lot of new investors that came in. We saw them come into followthemoney.com. You probably saw new investors at ForexAnalytix, and many people wanted to learn. But all they saw was this rip-roaring rally. And so back in the 90s, I lived through that dot-com bubble. I thought I was a genius making money. And then, of course, when the bust came, the dot-com collapse, dot-com bubble finally bust, one of the biggest mistakes I made was not to take advantage of the blowout. Instead of being able to pick up shares of Amazon at $15, instead of buying shares of Microsoft, really high quality companies for my long-term portfolio, taking advantage of that, I was fearful. I was scared. I was worried. I was concerned. I bought into the narrative that it'll always go down, right? And we know from trends that that's not true. I mean, Things go up, things go down, things go. That's what happens to the market. So right now, we're in a really strange place historically. And what I mean by that is it's not that unusual, but it is a little strange and odd compared to where we have been lately. Because let me get back to my mouse.
The Fed, the Fed makes it strange.
Well, of course, yeah, the Fed has certainly made it strange. But when you look at the time frames, for example, here, you'll notice that the S&P on the swing trend, the position trend, and the long-term trend. Yeah, just totally sideways. Now, trendless markets are pretty common, but not across all time frames. And that kind of builds the case of what you were saying. We are in the symmetrical triangle, and it really is indecision. So anything could kind of happen here. That 200-day moving average overhead, that certainly we failed at it twice, once in April and then once again in August. If we retake that, that's going to be fairly meaningful, especially if it comes on higher than normal volume. And that inflation report that comes out on Tuesday is going to be parsed by policymakers and traders, looking for, the speed of the disinflation. How quick is the inflation going down? And then they're going to extrapolate.
So you're expecting a benign number, Jerry?
I think it's going to possibly be better than what some people are expecting. We've seen a tremendous decrease in gas. We've seen a tremendous decrease even in rent prices, not coming down, but the pace of increases have really decelerated over the last month. And several other things as well. There's been many markets that have seen, a pretty decent pullback. Even many of the commodities, much of the commodities complex has been hammered. So all those input costs inevitably lead to the cost of goods and services, and especially goods. And so we would expect that if that number comes in a little better than expected, it's really going to push the narrative that the Fed is going to have to not take rates as high as they may want to, and they're going to have to turn around and pivot at some point. Now, if you look at the Fed futures market, you'll see that the Wall Street expects the rate cuts to begin in Q3 of 2022. Now, how realistic that is, I don't know. But that's currently the anticipation. And if they move the needle on that with that inflation report and push it back, say, to Q2 because it comes in better than expected, that could lead to a repricing of risk.
You mean 2023, right?
2023. Sorry. Yeah, okay. Correct. Yeah. That's an important distinction. Thank you for. Okay. But Q3 2023 is the current expectation of when those rates begin to come back down. Yeah. We're of the opinion. And I don't put too much stock in opinion, so I'll say that up front. This is my 2 cents worth here, but we're of the opinion we much prefer data and trends. But my opinion is that we cannot get above much more than 4% interest rate.
10-year?
I'm mainly talking about that Fed funds rate. Okay. I really can't see it getting above much more than 4%. For a multitude of reasons, but predominantly.
Could we service debt? I mean, what's going to be the interest costs on the large amount of new debt that we've taken on since COVID?
Right.
Let alone all the other legacy programs.
Exactly. You make the case there. That's the problem. And when you go back for, say, 30 years, Dale, the average Fed funds rate is 5.67%. That's okay. But right now, if we were to go to if we just went back to the average, a 30-year average of the Fed funds rate, we'd probably collapse the economy even more. So I would say the 4% range is really what the Fed's been targeting. They've certainly been kind of forecasting, but of course, many expect that the rates are going to have to go much, much, much higher. Yeah. I'm not of that opinion for 2 reasons. A, I don't think we're going to need it. B, I'm also of the opinion that they don't have the ability to do it because of the debt servicing issue you mentioned.
Okay, I wanted to ask you, a lot has changed possibly in the dollar and more markedly in gold and silver. And I noticed you had Bitcoin and silver up there. What do you think's behind this silver move? A lot of people at bottom go, well, I don't believe it. It's another bear market rally. I've seen this before, and I still don't like it. And gold, all the disappointment of the gold longs not being rewarded with high inflation happening, and now we're on the cusp of the numbers getting better. You getting any kind of message from what's happening with silver
Well, silver,
outperforming gold?
yeah, I mean, if you look at the silver gold ratio, it's really extended. You know, we were about 96 or 97 just a couple of weeks ago. And in fact,
That
there's
was
another
halfway back from the highs and the recent
a,
lows.
right. And in fact, I have another chart here that I want to pull up because it really speaks to what you're saying. It shows the extreme let's see, let me pull this over here.
Bearish sentiment.
Yes, incredible.
Oh, yeah, you're telling people to buy physical. I think that's a good idea.
Yeah, we like,
It was
here it
better
is.
last week, but you probably had this up for a few weeks.
Yes, this came out on this particular chart came out, and we put this out every weekend. This is our report we put out on the weekend. It has all the different charts. This particular chart, though, I put out on Twitter on our handle FTM Daily for those who want to follow us there. But this is the silver ETF, and it doesn't matter if you use a silver ETF or physical silver. In fact, you know, we could use any of them. But you'll see that when you look at a ratio between silver and the S&P, it's trading at the lowest level since 2006, despite the fact that silver, you know, is well above where it was back during those times. So the silver ETF SLV has never traded lower versus the S&P during its existence. And if you look at a chart of, say, physical silver, it looks very similar. So the sentiment
Do you have
here,
that chart to show the comparison?
Yeah,
Silver to S&P. We're seeing the physical silver chart right now.
Oh yeah, let me see. There's the. Oh, you're not seeing the new one that I just put up, are you?
No.
Let me see. Let me put it in here. There we go. I didn't realize. Can you see that now?
Okay. Oh wow.
Okay. Yeah, there we go. So there's the chart. You know, this is the silver ETF SLV, the most liquid one that's out there. I mean, it's not my favorite ETF, but it's the most liquid one, largest. And it's trading near its lowest level. In fact, practically at its lowest level since it began versus the S&P. Wow. And that really speaks to where we are, even with the S&P down, even with inflation at these current levels. Look, I own physical silver for the long term. I do believe that it's a valuable asset that is necessary, required for the solar boom, for the EV boom. And there's many industrial applications for silver, but it sure has taken it on the nose in this inflationary time. You know, people who were concerned about inflation bought gold and silver. And when you look at, say, something like gold, even here's a chart of gold. You know, we see that same downtrend intact, long-term downtrend, position downtrend. And then we look back on the chart, Dale, and we see that back here in February and March, right here where this red zone is, you'll see there was a lot of buying, and that came on big volume. So assuming we're able to get back above 1875 resistance in the near term, we're just going to have a wall of resistance here from people who may have buyer's remorse, who bought it in this run up, and they're going to be wanting to unload it for, you know, break even. So
they should hold it for 2,500.
Yeah, I'm of the opinion that gold and silver go higher long term. Absolutely.
I know silver is going to outperform, but you know, I don't think you know, silver is going to go to $38 without gold moving. So you know, but you're right. And you know what? Look at the miners. And that was a great chart of the silver compared to the S&P. That looks like the low was 20 in 2018. So we've had about a 4-year base, and you know the expression that Louise Yamada stole from me: the bigger the base, the bigger the launch into space. That's a hell of a base.
It is
saucer bottom here.
Absolutely. Yeah, absolutely. So there is a lot going on with those two markets, but the sentiment here, the bouncing off of the 1750 lows, this is the area we watch. But the other thing to watch, interestingly, on silver is the 30 SMA. We've been tracking that for a few years, and it reacts interestingly to the 30 in particular. And so we follow that one. And right now we're hovering
1940.
Yeah, about 1940, and we're hovering right below it. And It's going to be a similar situation to gold. The February and March buyers really pushed it up on some anticipation. I think there was also a silver squeeze thing going on at the time. So get a lot of buyers here up to about 26, 27 that are probably going to want to take some, get out, break even when they get there. So expect pressure all the way up until we get to new highs.
The other crowded trade was long dollar positions and short euro positions, two of the most crowded trades on the board, based on commitment of traders, based on sentiment indicators. What's your view?
So the dollar we have been long on for some time. We actually do, we actually rank about 150 plus ETFs. And let me go down to that chart or that table because I want to show you that. UUP has been, there it is. And so here's our ETF leaderboard, what we call our ETF leaderboard. And you can see that Turkey's at the very top. This is for position traders.
Wow.
Turkey's at the top, ironically. They're running at about 80%.
With their currency collapsing, their market's exploding?
Right, exactly.
Okay.
Just kind of like what we had here back in March of 2020, So, but Turkey's dealing with an 80% inflation rate. They just cut rates by 1%, shocking the market with 80% inflation. Their market has really outperformed over the last few weeks. The dollar has been in the top 3, pretty much at number 1 for the last many months. So we've been pointing at the US dollar for our members. And then you can see other areas we like right now continue to be things like solar energy and clean energy, uranium. Thanks to the Inflation Reduction Act, there's going to be a lot of tax credits going towards those markets, and we're already seeing analysts begin to upgrade solar stocks that they had left for dead. Goldman Sachs, for example, just upgraded First Solar, for example. In fact, I think I have some solar charts or some solar rankings I'll show you here.
And uranium's interesting. Did that pop into your screen before Japan said they were going to move back towards it? That was kind of important news. Uranium got.
Yeah, uranium has been in the top 10 now for a little bit. We use several different indicators and a proprietary system to kind of bring that together and rank these things to keep our members focused on the right, on the leading markets. And yeah, uranium has been there. We think there's plenty more upside, although there's so many different places to invest with uranium. I'm just kind of old school. I just like Cameco, to me, Cameco, or a uranium ETF. I know there's a lot of guys who like to get in, really down deep and focus on some of the small caps. I find that to be a little risky for my taste, but the more you research, I'm sure you can make plenty of money there.
Okay. You do a lot of work, Jerry.
Yeah, we've done a lot of work here. Let me see. I'm looking at like for example, we were mentioning solar. I mean, solar right now is on this trajectory where we're going to see we've already had a record. We're already heading for a record year in 2022 for U.S. rooftop solar installations. But there's so many companies that are going to benefit from that over the next, several years, all the way out to 2030. In-phase, First Solar, for example, I just mentioned, they just got a double upgrade from Goldman Sachs. They lifted their price target from 60 to 172. That was quite an upgrade and quite a repricing of its price target. Sunrun is another stock that company actually focuses on rooftop solar. They're very aggressive. So I think there's a lot of opportunity in clean energy as well.
Okay. Nat gas, you have a view there with the
natural
winter
gas
coming in Europe. I saw news today that Germany said they're 90% ready with reserves to go this winter. I don't know how they got to, we're going to freeze to death to they have plenty of reserves now. You following that European part of this story?
I have. They did. They're going to outline some concrete measures to address the crisis. The crisis over in Europe is outrageous. We have members over in Europe here at Follow the Money, and we've gotten some really bad stories. Some people just showing us their utility bills. The utility bills over there are just crippling for businesses and even for residential customers. You have the price of natural gas, while here it just hit $10 for the first time since 2008. Over there in Europe, it's 10 times higher than it is here, and really no sign of relief. Now, you did mention those details, how Germany is working it out. One of the biggest problems I think about the natural gas issue, Dale, one of the saddest problems, is that Iran is the second largest producer of natural gas, and they have the ability to take care of Europe's energy crisis. But the world has been so focused, and this is my opinion now, and people may have opinions that differ from mine, of course, but we have been so focused here in the West on propping up regimes like Saudi Arabia and vilifying regimes like Iran that, we have kind of created some of these problems on our own. Iran is willing to help with Europe. It's willing to help with, help with this current crisis. It has the means to do it. We just haven't built out the pipelines. In fact, every time Iran tried to build out a pipeline to get its stuff over to Europe, Saudi Arabia would throw a hissy fit. And so we would have this problem, and in fact, part of the wars in Afghanistan and Iraq can be directly related to preventing Iran from getting its natural gas and oil into the global mix. And
so do you really think that, let's say, for example, the treaty happens and the West changes its attitude, that Iran, which is very closely aligned with Russia and China, would bail out Europe?
Well, I think that they wouldn't be able to now because the infrastructure isn't even there. I mean, the pipelines have to be built. The shipping terminals would have to be, put in. So, I mean, literally, this is exactly the problem, is that these things could have been addressed earlier, and they could have been dealt with. It's tragic. Exactly. It's the same thing with renewable energy. Many people don't like renewable energy for political reasons or for practical reasons or whatever. But when you think about it, Dale, we could have really empowered ourselves, many decades ago. We've had this technology for a long time, but the big oil complex likes things the way they are. They like things the way they are, and they don't want to rock the boat. And
well, Jerry, even the disease is partisan.
Right, exactly.
In our world. I mean, the first time in history, first time in history, I have the flu. Well, you must be a Democrat if you have the flu, or you must be a Republican. I have pneumonia. Well, are you come from a red state or a blue state? It's just ridiculous. I agree with you.
It's enough to drive you mad. It's enough to drive you mad.
Makes you really want to keep paying taxes, doesn't it?
So true.
Yeah. So, wow, you do so much work, Jerry. I mean, you're really comprehensive. And I don't know, we're moving into fall, summer's ending here. Kind of give us your view, because, these interviews are kind of spaced out, of, what you're imagining, like Wayne Gretzky, he goes to where the puck is.
Right.
Larry Williams says, as traders, we need to live in the future too, and not just, kind of look at where we think things are going to be in the months ahead. What's your gut instinct with all the research you do? There's still that trader investor intuition. What's it telling you going into the next 3-4 months?
Sure. Without a crystal ball, of course. If I have one, it's broken. But let's just say that I did. I mean, if we were looking forward, if I use that intuition and say, what do I think is going to happen by, say, year's end? Yeah, I'm of the belief that we have spent so much time. I think most people have spent so much time on microeconomics, and they haven't focused upon the macro. So when inflation came, most people didn't even know what it was. Whenever we were dealing with some of these issues, so many people, I think, in the West are kind of economically deficient. Illiterate. Yeah, for the lack of a better word, illiterate. And And because of that, I think it led to max pessimism very quickly. 2022 has been a year for the record books. I mean, the pace at which we saw the deceleration of the stock market trend and all of this, it was just incredible. We've seen stocks, have 80% drawdowns that are considered to be, big companies on the major exchanges.
They were a place. I remember people calling things like Amazon their flight to safety trade.
Right. Exactly. So
plane crash.
Right. And I think this is just my opinion of where things could go. I think we have seen too much pessimism because what happened here, Dale, was in 2020, we should have had a recession. Okay. We should have had a recession in 2020, but it was an election year, Dale. And so because it was an election year, they broke out all the Band-Aids, they propped up everything, they broke out the duct tape, and they kept that thing together and they pushed it up. We should have known what was going to happen. And there's a lag factor in economics. And so the Fed now is bringing the medicine. The market has certainly come back down. I'm of the opinion that we have seen max pessimism in the United States, and that from here it goes from bad to less bad. And when you go from bad to less bad, there's a lot of money that can be made. So I would expect that the S&P will likely have a Q4 rally, maybe not up to brand new highs, but certainly bringing us out of that really bad state to a less bad state, at least in terms of the S&P 500. That would be my expectation. So for me personally, I continue to dollar cost average into the most highest quality companies because I like this opportunity to add on a very sizable, sell-off. There's a lot of great companies out there for the long term that I think will outlast the United States government, and I want to own those for the long term.
Okay, Jerry, laying it on the line for you guys, Jerry Robinson. So minimum follow him, and best way for people to get a hold of you and stay in touch with your research and your great work, Jerry.
Yeah, thank you. Sure, they can follow us on Twitter. I'd love to talk to them there. The handle is at FTM Daily. And then if you want to go to our website, you can go to followthemoney.com. We have a free podcast, free newsletter, all that stuff. Feel free to sign up for that right there on our website. And I really appreciate the work you do here, Dale. I was excited to be invited back because I know you guys do great work, and I really appreciate the invite.
Well, stay excited because we'll talk again this winter.
Great. Look forward to it.
All right, Jerry, my trading warrior brother, Jerry Robinson, everybody.
God bless you, Dale.
Thank you. Back at you, and thanks for sharing your excellent work with us today, Jerry, edifying the community. We appreciate it, and you. All right, guys. So that's a wrap. Follow Jerry. He gave what a line that these companies will outlast the U.S. government. That caught everyone's attention, Jerry. So that's pretty long term. Well, maybe short term. Anyway, guys, could join the team in 15 minutes on the Morning Edge. See everyone for Turnaround Tuesday. And the only reason I, showed my use a video camera is that my hair is becoming fashionable in the markets. So have a great day. Hi-O Silver. And I'll see you guys tomorrow. Don't just count your pips, count your blessings. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.